Hey guys, coming at you earlier than usual today. The market just closed 5 minutes ago. It's Tuesday, June 16th at 4:05 p.m. And kind of a weird sideways day in the market today. I did not open up or close any positions today, so I did a whole lot of nothing, but that's okay by me. Like I said, I wanted to kind of feel out what the market was going to do this week just because it was a rough end of the week last week. Yesterday was really green. So if we just take a look at the big board, this is how the market opened up this morning, a whole lot of green on the board. So now if I refresh it, it's also how it closed today. So a lot of green. Tech was up big, all over 1 to 2%. AMD and Nvidia were both down actually. But that's okay because right now I'm completely free and clear of my AMD shares. I don't have any open positions on AMD and I don't have any shares of AMD because you saw my video from yesterday, I was able to sell them off. So the other play that I currently have right now, though, is Micron. I currently own 100 shares of Micron at $49.50. So we'll talk about that later in the video. But because AMD was red, I was thinking about opening up another put, a cash secured put on it for this week. But I was really on the fence. I was 50-50. So let's take a look at the chart here. So AMD opened up in the green. It was up about 2.4% pre-market. Opened up at 55.74, which is almost 2% up from yesterday, right at the bell. Then just slowly bled off all day long. So it actually closed at around $54.50. And, you know, like I said before, you want to open up put positions on red days because that way you can get more premium and you can also try and get in at a lower strike price. But, you know, once I saw AMD was kind of bleeding out all day, my plan was let's wait until power hour, until 3:30, 3:45 to see if AMD really drops and I can get in at a good put. And then hopefully it'll be pretty secure because if you've seen from my previous videos, and if we take a look at the chart on AMD, you know, I've mentioned that at least I've noticed that AMD likes to hover between the low $50 and the high $50. So it's been doing that for the past about 2 months or so, where it kind of jumps back and forth between low 50s and high 50s. So because AMD was trading in the low $50 range right now, if I wanted to collect, I wanted to be, if I did open up a position this week, I wanted to be extra safe in my position. So I was looking for puts at pretty much exactly 0.4% return on risk, which is my kind of personal bare minimum. So at that level, I was pretty much looking at a $51 strike in terms of a 0.4%. So if we just do some quick calculation here, it was about $19. So let's just say $19 divided by 5,100 because it's $51 per share times 100 shares. So that's about 0.37. So, you know, I could have probably fudged with the numbers, maybe tried to get 20 cents of premium instead of 19, and that may have bumped it over. But let's see, if I had gotten 20 cents, yeah, I mean, we're almost there at 0.4%. So I was looking at the $51 strike. You know, it was about $3 away from where the stock was currently trading at. It wasn't as big of a buffer as I liked. I really would have loved to get into like 50 or less, ideally like high 40s, because I did some math at the end of the trading day Friday, and based on the premiums that AMD was giving, I could have gotten like high 40s in terms of a 0.4%. So if I had that opportunity today, I would have certainly taken it. But, you know, just because it was so close to the stock price, it was only a $3 buffer. The premium I was getting wasn't really that great. And I just didn't get a good setup. You know, AMD stock, if we look at the chart, it didn't really bleed off during power hour. In fact, it actually went up a little bit. So here's 3:50 p.m. Usually around 3:50 to 4, all the stocks either just sell off hard or they go up big. This one started going up, so it actually went up from 54.16 to 54.46. So it jumped 30 cents in the last 10 minutes of the trading. I was kind of hoping it would keep selling off. That way, maybe, you know, maybe I could have gotten good premium and a 0.4% at a $50 strike. If I had gotten that, I probably would have gotten in. But, you know, like I've said in my previous videos, I just didn't get a good setup, in my opinion. You know, I didn't want to force a trade, and today is only Tuesday, so who knows what's going to happen Wednesday, Thursday, Friday. So maybe tomorrow morning, you know, if futures are red and we open up in the red, maybe I'll have a good opportunity to get in tomorrow. But like I said, over this past weekend, my overall plan for this week was to be as much cash as possible, which I am, except for my 100 shares of Micron right now. So I'm happy because I've been accomplishing my plan so far. And if you saw my video from yesterday, I was able to make a decent profit already. So even if I don't make any more profit this week, I'm very happy with where I am for this week. And like I said, the market has just been very tenuous. So I just want to kind of be extra cautious this week because, you know, we're again kind of nearing the highs right before the pandemic. So I think even the market doesn't really know what to do with it. And the other thing is, if you've been following the news over the past few days, there's been talk of cases of coronavirus surging again in China. So I think when this pandemic first started here in the US, it was already going on in China, and we kind of ignored it, for lack of a better word, in the country. And then once it came over here and really took off, that's when the market really crashed. But the smart people that knew what was going to happen, or were kind of predicting that it was going to come to the US and really destroy our economy, they were smart and they sold off all of their stocks and things before the crash. And if they were really smart, they bought back in at the dip, and then they're riding the wave back up again. So kudos to those people, because they probably made a ton of money just in the past couple months. But I am very hesitant now because I don't know if history is going to repeat itself. And, you know, I don't think the stock market right now currently has priced in a potential second wave in the US like what's happening in China right now. And especially with a lot of the riots and things opening back up, people are getting together more. So I think there's more opportunity for the virus to spread. So I think it's very feasible that, you know, we could have another wave. And this is not financial advice. You know, I'm not a medical professional. I'm not trying to tell you what to do. This is just my opinion based on, you know, the articles that I've read and the news that I've seen. But that's why I think this week and probably next week and the week after that, I'm going to be extra cautious and not try and make super risky plays. I think I'm going to stick to like my 0.4% return on my risk. That way I have a good buffer between where the stock is currently trading and what my strike price would be. But yeah, so I did not do any new trades today. That's my thought on AMD. So again, we closed AMD around 54 some change. So right around this 78.6% Fibonacci level here. So, you know, the support level is at $50.80. So if I had sold a put at $51, I probably would have been okay, just because that's pretty much at the support level here. If I had gotten it at 50, which is below that support level, I would have been even more assured, because the last time it was that low was May 27th, and it kind of bounced right back up. And before that was in early May, and it also bounced right back up. So I think like the $50 level is a very strong support for AMD right now. So I do kind of want to get in maybe tomorrow if I can get a good fill and a good setup, and I can get in AMD at like 50 or lower. I think I'll be pretty secure in just securing some extra cash for this week. But if not, like I said, it's not the end of the world. So let's take a look at my Micron. So I have 100 shares of Micron at $49.50 because I got assigned on my put from last week. So Micron was kind of nice. It opened up in the green, it was up over 4% pre-market. Opened up just under 4% at 51.16 today. And it basically traded sideways all day long. I mean, we opened at 51.16 and we closed at 51.02. So we were down just a couple pennies. But so that's great. If somebody opened up a put on Micron, let's say yesterday or today, and Micron just traded sideways, and you were just basically, you know, playing time decay. So time was in your favor. Micron didn't go up and didn't go down, but you slowly collected premium because that's 1 day left now, 1 day less left to expiration. So this would have been great if you had a put on Micron. But, you know, right now, because Micron closed at $51.02, so let's just do some quick math. So $51.02, and I own it at $49.50. So right now, I'm up $1.52 on Micron per share, and I own 100 shares. So actually, I have $152 in unrealized gains in Micron. And I say unrealized because I haven't sold yet. So I had a sort of an epiphany, or at least a thought last night, because I know I told you in my previous video that my goal was to just get out, cash out, because I could have done that at any point during the day. I could have cashed out and collected about $100 to $150 in profit on Micron easily, and then bid 100% cash for this week. And, you know, if that was the case, I made about $150 yesterday. I would have made about $150 today, so a total of $300 in a week would have been fantastic. But just do some quick math, $300 over roughly $25,000 portfolio, that's a 1.2% return in a week, which is great. But I thought about it and I said, you know what? Because the market got really green yesterday and it looks like, the Fed printer was going in overtime and we were just pumping money. I thought, you know what? Why don't I just hold on to the shares and just watch it? And let's see if Micron goes up. Because what if it goes up by 52 to 53 to 54 or something later in the week? Then I have left profit on the tables if I sold out at around 51. And then what I was thinking was, let's say Micron just trades sideways or just keeps going up slowly by slowly for the rest of the week. Well, then what I can do is when Friday comes around, because I really don't want to be holding shares going into the weekend. I definitely want to cash out everything by Friday end of day. So what I was thinking was what I can do is, let's say Micron is still around this level on Friday, or let's say as long as it's above 49.50 on Friday. Let's say Micron gets to, let's just say $53 on Friday. What I can do is I can then sell a covered call at like $52. That way I'm pretty much guaranteed, unless something crazy happens and Micron just, drastically falls, I'm guaranteed to sell off my shares on Micron and collect a little bit of premium on top of that, on top of the stock appreciation. So, I could say to myself, well, today I was willing to sell it off for roughly $51, right? So even if Micron, let's say, goes to $55 in terms of the stock price on Friday, what I can say to myself is I can be extra sure that my shares are going to get called away, and I can sell the $51 covered call. That way, it's a $4 difference, so it's pretty much a guarantee that those shares are going to get called away. So I will still collect the $150 in stock appreciation between my share price of $49.50 and then my sale price of $51. But because that would be really in the money, for example, if the stock price was $55 and I sell $51, it's going to be really in the money. So I would collect a couple $100 in premium as well. For example, let's just say 55 to 51 is a $4 difference in terms of being in the money. So right now, if we look at 51 and we go $4 down, so that would be about what, $47? I could collect roughly $400 extra in premium. So I would get the $150 in stock appreciation plus the $400 in premium, so like $500, which is a way better return than just selling off my shares. Now the risk I'm taking here is if Micron just drops. Like what if Micron drops from 51 today to like 47 on Friday? Well, now I'll have unrealized losses. So that's the risk I'm taking. But based on what I've seen in the market so far the past 2 days, it looks like we're not really going to dip, knock on wood, at least anytime soon. It looks like we're going to either trade sideways or keep going back up. So that's kind of my game plan right now, is to just hold the shares and then sell in the money covered call on Friday, so I get stock appreciation plus premium. Now, if you really want to be risky, and let's just say Micron goes to 55 on Friday, I could sell like a $54 call. And that way, I will collect less premium because it won't be as in the money, but I will collect way more in stock appreciation, right? Because from $49.50 to 54 is a bigger difference than from $49.50 to, let's say, 51. So those are just kind of the options and the things that are going through my head. But I am liking that strategy right now of holding the shares because I don't want to miss out and leave a lot of profit on the table if Micron wants to jump to like 55 or something crazy, because that's an extra like $400 that would leave on the table. And like I said, the market's been pretty stable, for the past 2 days. It hasn't just been like hitting circuit breakers like it did on Thursday. Or it didn't hit a circuit breaker, but you know what I mean. It didn't just drop drastically like it did on Thursday. So that's my strategy with Micron right now. So I am very heavily in cash right now. So, if I really wanted to open up a put on Micron or AMD, I could even open up multiple contracts if I wanted to. But like I said, I just really wasn't happy with the trade setup that I had on either of these stocks. So just taking a look at the chart on Micron. Micron, again, is now trading in this kind of light blue region between the 78.6% and 100% Fibonacci levels. So it's trading between around $50 and $55 roughly. So similar to AMD, Micron likes to trade between like the 40s and 50s, but really like the low 40s and high 40s. Every time it's kind of gone up above 50, it doesn't stay there for too long. If you look back, it likes to trade, like I said, low to high 40s. So we might be a little high right now. So that's why I'm a little bit more hesitant to sell puts on Micron compared to AMD, because I think we might be near the top of where Micron likes to trade. And actually, if you look at the RSI curve, it's very close to the overbought category. So if we just go back to AMD, AMD is kind of in the middle. But you know, my very crude technical analysis makes me think that we're kind of at the not the top, but very close to what Micron likes to trade at. So if I was to sell a put, I don't want it to be tested. So that's why if I am going to open up a position this week, I'll probably open up a position on AMD. So just for fun, if we want to take a look at Disney kind of traded sideways today. It opened up in the high 1-teens and actually closed a little bit up in the high 1-teens. It was actually up $1.36, which is about 1.2%. So no real excitement there with Disney. IWM was up about 2.4%. It was up $3. So, you know, it's interesting because IWM, I think, opened up the market at like 147. Let's just take a quick look at the chart. Yeah, so IWM pre-market was 147. It was up 4% or over 4%. Opened up at 146. And then we just pretty much traded sideways. We bled off a little bit. I mean, we lost about $2 from where we opened. But, you know, IWM is crazy. I mean, IWM compared to the other indices like QQQ and SPY fluctuates a lot. And I think that's because it's made up of like the small and mid cap stocks, which are going to have a lot more volatility. But, you know, if you want to be a conspiracy theorist, so this IWM, the iShares Russell 2000 ETF, it's a fund by the company called BlackRock. And that's the same company that the Fed is using to buy all these ETFs and things. So, you know, a part of me is like, well, the Fed is not going to let one of BlackRock's ETFs just crash, right? Because that's the company they're using to kind of pump up the economy. And then if you really want to be a conspiracy theorist, here is a snapshot of the Fed Chairman Jerome Powell's portfolio. So you can see Jerome Powell actually owns the same stock, IWM, or same ETF, and he owns between 100 to 250,000 of it. And he must own more because it's listed multiple times, because it's listed here at 1.5. Listed here on number 3.7, he owns another 100 to 250,000. Again, here at between 250 to 500,000. Here's another one between 500,000 and $1 million. So he probably owns between $1 to $2 million worth of IWM shares. And then here's more BlackRock, right? So he has a lot of these iShares or BlackRock ETFs. So he's got the S&P 500 index. He's got the MSCI. He's got the real estate ETF. He's got, what else? Growth ETF, value ETF. So Jerome Powell himself has a lot of money invested through BlackRock and in their ETFs. But if you look at his whole portfolio, he's very diversified. He's got ETFs in all the different sectors, right? The mid cap, small caps, the S&P 500, real estate, international real estate. So, you know, he is very well diversified. And if you just add up all these values, I mean, he's got probably tens of millions of dollars in the market right now. But, you know, I find it interesting that he's allowed to invest in stocks, especially in companies that he's personally invested in, or at least stocks that he's personally invested in, but I guess he's allowed to do that. So, you know, a part of me is like, well, I should go heavy into IWM, or I should copy as much as I can Jerome Powell's portfolio, because he's not going to let his own portfolio tank, right? So, just food for thought. So if you just want to take a quick look at a lot of the popular stocks that were traded today. So again, a lot of calls on the board, right? So that tells me that people, I think, are generally bullish on the market, which is a good sign. Some of the most popular stocks were actually American Airlines was the most popular. Apple were 2 and 3 here. You know, my bread and butter AMD, that 55 strike call, it's really popular right now. So who knows? Maybe I should open up that put on AMD tomorrow, because it seems like people are just bullish in general. What else? Is there more AMD? Here's AMD again, $55 put. Oh, that's interesting. So we got $55 calls on AMD that are popular and $55 puts on AMD that are popular. So, it seems like maybe people are 50-50 in terms of whether they're bullish or at least bearish on AMD. There's more AMD here at 57.50. Similar scenario here. They got 57.50 calls on AMD and 57.50 puts. So very interesting. It looks like people are undecided on AMD whether they think it's going to go up or down. Let's see. Do we see any Micron here? I don't see Micron. Here's another AMD $60 call. That was more popular a few days ago, but I don't see Micron, So Micron wasn't a popular stock today. So maybe other people felt the same way I did, and that Micron just wasn't giving a good setup to open up positions on. But yeah. So let me know how the market treated you. Let me know what your plans are for this week. Did they change based on what your plans were from this weekend? I think it's important to be fluid throughout the market. It's important to make plans and kind of have a strategy in place. But you also have to keep in mind that the market is very unpredictable and nobody knows what's going to happen. So you also have to have backup plans, and you have to be able to kind of pivot and change up your plans and strategies depending on what the market gives you. And like I said, try not to force trades, because I feel like whenever you force trades or make quick decisions, it always kind of comes back to bite you. But that's the one last thing I want to end you with is that, if you go on Reddit or Twitter or like YouTube even, there are a lot of people that have stock accounts, meaning they have Twitter accounts or Reddit accounts or YouTube channels that, are showing you all their technical analyses, and they're telling you what stocks you should buy and sell and whatnot. Just be wary of those people, because a lot of those same people are also going to try and sell you on their programs. And these same people will like tweet out like, oh, look, see, I was right. I told you AMD was going to jump up $5 and it did. Subscribe to my course for $1,000, or, subscribe to my Twitter for $100 a month. All that stuff, in my opinion, is usually just them blowing smoke, right? Because they always just show you all their wins, and every time they were right. And they're like, oh, look, this guy joined my course and he made $100, and this person joined my course and he made $200. So, everyone's making money. You should pay me money to help make you money too. I just don't buy it. If you actually sat down and just wrote down every time a certain person like put a call out, and then actually yourself like did some analysis in terms of how many times they were right and wrong, it's probably going to be close to 50-50, right? Like it's just a gamble. And no matter what people tell you, nobody can predict the future. The market is so unpredictable, right? You go to CNBC, MSNBC, any of these like stock market shows, nobody's right all the time. So you're going to win money, you're going to lose money. And at that point, it's just gambling. I'm not trying to tell you things. In fact, I don't want you to follow my trades. I just do it because I enjoy making videos. I think it's fun. I don't want you to follow my trades. I want you to make decisions on your own. I want to teach you. I want to give you the tools to make your own decisions. But that's why I like the Theta Gang strategies in the wheel, because I would much rather make kind of slow, consistent, and somewhat reliable profits than just like gamble and just be up big and be down big like week to week. Because I think at that point, you're just gambling. You might as well just go to the casino. But that's just my, soapbox speech. So just be wary of those people that are trying to sell you stuff. Because if you think about it this way, if you have to pay somebody $100 for like their monthly stock tips or whatever, that means you're already in the hole $100 every month. So in order to make that purchase worthwhile, you have to make, let's just say, $101 that month, because you're already in the hole $100 because you're paying someone to give you stock tips. So you need to already make $100 to just break even. So that just doesn't make sense to me. There's plenty of free resources on the internet that you can just learn on your own. And, you can just paper trade at the beginning, just so you can have like hypotheticals of what you would have done and how you would have fared. And I recommend that, start small, paper trade, just so you don't blow up your account and then you don't have any more money left in your portfolio to invest in, even if you wanted to. So just be smart out there. And then lastly, I know a lot of people in my comments have suggested stocks, but I personally, some of these stocks people recommend have become like meme plays. People are talking about like these stocks like Hertz. Like, I have no idea why people are buying Hertz. That company is going to go bankrupt, but yet people are pumping the stock up, and it's crazy. I feel like you're just playing with fire. So in general, if I see like a stock in whatever Twitter or the media or Reddit has just become super popular and I don't have a position in it, I'm not going to open up a position usually because I feel like I've already missed the boat. And then if you get in, you're probably going to get burned or you're probably not going to make as much profit because you got in too late. So I just let it go. It's not a big deal. There's always another trade, right? There's tons and tons of stocks to play. So just because you missed one, it's not that big of a deal. I'd rather live to fight another day than potentially like blow up my account or lose money on some meme stock or some hype stock that, you know, these people are just pumping and dumping. So that's just my little rant for today. But overall, it was an okay day. It didn't really make any money per se. I mean, I did, but it was unrealized. Didn't really lose any money. So I'm fine with that. Like I said, this week I wanted to play it extra safe. So let me know how your week is going. Let me know what your strategies are for the rest of the week. And if you have any questions or comments, leave them below. And as always, happy trading.